Before you buy silver, you got to check out these charts. Welcome to part 2 of the Sunday Chart Show. We got metals, miners, dollars, and bonds. I'm your host, Steven Van Metre, and thanks for joining me today. Let's kick this off as we do every part 2 show with gold. That's looking like it just pulled back, maybe even a little bit more, as we immediately start out with the momentum indicator, the relative strength indicator. You want to see it at 40 or above. It's sliding. It's just barely holding there, potentially suggesting it could dip down into oversold condition. But for the moment, it's holding just on the edge. How about the MACD? We had a negative crossover. Remember, this is your moving average convergence divergence, or like to say, the moving average crossover strategy, because when you see a negative crossover, that usually is an indicator for traders to sell. And you can see that the black line, the MACD, crossed through the signal line, which is your red line, and is showing that perhaps further weakness in gold. You could see a slight curvature here. Perhaps it's going to start to make a bottom, but it still indicates potential weakness in gold. How about Momentum Timer Pro, which uses 2 of the 3 signals, a positive signal on the RSI, positive cross on the MACD, its own internal signals, and it's telling you on the 1, 3, and 6 month signal that's in a downtrend, or the 1 month saying, hey, there's a downtrend here, and the 3 and 6 month is saying you're in sideways trend, potentially slowing. So if you get a flip in signals, you might want to wait, or again, keep your stops tight, because it's signaling perhaps a downtrend here. 5 days of sells. Again, this report is still free. You can click the link in the description below or up in the corner, and you'll get your next report on Monday. Now, there's a guidebook, though. That'll help. There's a guidebook and videos hopefully coming soon. And of course, if you watch this show, you'll get a better idea of how to use it. Looking at the bigger picture, it's gold to under the 21-day moving average. Momentum slowing, still remains bullish on the 58-day and 100-day, meaning they're still rising, but potentially looking to roll over below the 50-day moving average, which is pretty important. If cross again below the 50-day and confirmation on the bottom side is bearish. Let's take a look at the charts for gold futures. We're now on the 2-year chart, looking at the volume profile out 2 years. Lots of shares traded at 1,800, but we've talked about this before, how gold gets choppy and then comes down. See, got choppy, except this time it popped up. Everyone said I was wrong, came all the way back down, and then was in a sideways chop fest, and finds the 50-day moving average rolling over, confirms the bottom side before. Look at this, 50-day still rising. You can barely see it. Look for a chop in gold here as it tries to ride the 100-day. Did that before. And then if it tags the bottom side of that 50-day, look out. Next move is to the downside. All right, let's take a look at the miners, see if they're giving gold any hope. We see the relative strength indicator now under 40. Momentum is definitely to the downside, looking to go to oversold around near 30. How about the MACD? No signs of slowdown here. No signs of bottom on that black line at all, suggesting more downside for GDX. How about Momentum Timer Pro? 6 consecutive sell signals. And this is an uptrend. So you notice that the 3 and 6 month max and mid, and now you're starting to see a slowdown in the 1 month signal. So what's telling you, hey, this is a major uptrend, and now in the shorter term signals are starting to slow. It doesn't indicate this thing's going into bear market yet. It just says on the short term it's slowing down. Trade that accordingly. How about the longer term signals? 21-day moving average is bearish, as is momentum, but the 50 and 100-day still rising below the 9, 21, and 50-day moving averages. So again, it's just saying it's still broadly in an uptrend. It's just saying that there's a slowdown. Doesn't mean the floor's coming off for GDX. And sure enough, what do you see? There's your uptrend. It came down, broke the 50-day moving average, hit that 2-year volume profile line. So again, all you're seeing with Momentum Timer Pro is saying, look, uptrend, slow down here. Maybe the uptrend's not broken yet, not enough data. But if you're bullish on the metals, well, this 2-year, I was about to say 2-year volume profile line is a level of support. You're going to want to look for it to try to close that gap above, maybe get back up in here to 38 to see if it can reclaim that. If it fails to hold here at 34, well, now you're looking at breaking down to this yellow line here at 33.50, and then more support here down here at 32.50. So you want to tighten up. If you're in this, you kind of maybe want to tighten your stops here to the downside, right around where that 100-day moving average. And don't be surprised if it tags 100-day and then tries to fight and move up from there. All right, how about silver? Well, if you're bullish on silver, man, you're not gonna like these charts because relative strength indicator just went oversold. Remember, that has to be at 30 or below. It's at 28. How about the MACD? It's showing no signs of a bottom as the MACD line is headed lower. How about Momentum Time Pro? 6 consecutive days of sell signals. Looking at the broader picture, it's showing that this was an uptrend and it's coming down. Notice how the 3-month signal just flipped to a minimum. The 6-month at min, the 1 month is at 0. Is telling you that this uptrend is coming down. And let's take a look at the bigger picture. The price on the 2150 day is turned lower. Momentum across all the moving averages is lower. Only the 100 day is rising. And so you start to notice the 21 day goes bearish, the 50 day goes bearish, and then the 100 day will flip below all the key moving averages. This is a bearish picture for silver and not a good one at all, because there's a last line of support here sitting right above, just below $22 an ounce, and you can see it got up here, didn't quite get to 27. I was looking for it to get to 27 and get rejected. Sellers came in, drove it right through that 2-year volume profile line, right on top of this prior buy zone. But notice where the buyers have been at. It's 22, 22, just below 22, below 22, at 22. So you failed to hold 22. You're going to see 17 to 18 is where you're headed next. Not a lot of shares traded there. We can zoom out. If you're in disbelief of that, look down here, 17 to 18, the bigger 5-year volume profile right at 17. A lot of buyers down there. But look, watch this zone here. This is a buy zone. Price continues to break down. Those people flip, turn to sellers. And then all this here is what we know now is a topping pattern in silver. So watch out below before you add to your positions. How about dollars? Looking like a wrecking ball for the metals and miners. Dollar in overbought condition, well above 70, sitting at 73.8. And some people saying now it's time for a pullback. We watched the energy sector. We'll look at it again. It remained overbought much longer. Dollar could be the same. How about the MACD? And maybe a little bit of a slowdown here, but not a whole lot yet. So potential pullback in an uptrend for the dollar. Looks like it. Momentum Time Pro has been all over that. 18 days of buy signals validating this is in an uptrend. So if you get a pullback and then a flip back to buy, so if you see sell signals and then pop back to buy, remember you're buying an uptrend at that point. Usually there's some confidence there. How about the bigger picture? Bullish across, everything. Let's take a look at the charts because, the dollar, due to monetary policy, likely headed higher. Here's this big parabolic move straight up. And what do we know about those? They tend to get rejected. Look for a pullback on UUP down here to 27. That would be in the cards for what you would expect to see from the dollar. How about DXY? If you're trading the DXY, look for a move perhaps down here into right around the 21-day moving average, about just above 100 is what you'd be looking for. This little zone here of volume, or not volume, of shares traded. Let's go out a little further, and you can see there's a lot of support here right above 100, and perhaps even there's some support here at 101 for a minor pullback in the dollar. I think this thing's going a lot higher. Let's take a look at bonds, which have been beaten up, but maybe from a technical perspective are trying to find a bottom. How about TLT here? We know that it is at 33, still momentum to the downside, went from oversold, got a little bit of bump on it, potentially coming back down to oversold condition. Maybe it holds there before it moves higher. We've seen that happen before here back in October. How about the MACD? Well, you have positive cross of the MACD over the signal line, maybe hoping that it can hold this bottom here, perhaps much like it did back in October before price rallied there. And how about Momentum Time Pro? You've got a clearly defined downtrend, none, and 17 days of sell signal. So when this flips, you want to keep your stops tight. Wait until you get a little confirmation on the longer term signals before you build into that position. Of course, we know everything here is red, but notably, still too far. The charts are, there's really not a whole lot of interesting things on the TLT chart because we can look at the 10-day volume profile and see the sellers after hours drove this thing down. Now, whether or not it will open that low or not, we don't know. But when we go to the max weekly, I was looking at this just before the show, and this is interesting because we're going back to 2002, the history of TLT, and you see most those shares traded right here, right at this band here. And it tells you there's a lot of potential support there. Of course, the sellers are looking to break them, but people, when you look at who's buying these things, they're usually long-term holders. There's a ton of shares traded there, ton of support here, maybe a bit more pullback in that, and maybe the RSI comes down and then the MACD dips a little bit and then goes. But usually, you see back in history, this long trend here, price came down to the top end of it. Now, if we were applied that methodology today, we saw this trend come all the way down to all of where the shares are traded. And then you'll notice it gets oversold and eventually takes off as those shorts get squeezed. And of course, we'll be looking for that as the equity market blows up, and we talked about that in part one. How about the energy sector? Bonds would love to see this go down. Momentum slowing, but still above 40, sitting at 46 on the RSI for XLE. How about the MACD? You had a negative cross. It's heading lower, looking like perhaps it's going to pull momentum down and price with it. You'll have to check the Momentum Time Pro report on Monday to see what it thinks. Moving averages, we got 21-day headed lower, still 50-day, 100-day are rising. It's back below its 50-day moving average. That's kind of a bearish picture there. Let's take a look at XLE and see where it's at. And it's just a minor pullback here in the big picture. Let's zoom out and see what the story tells us. What we know is that when XLE peaks, and it usually makes a second run somewhere up at those highs, and then all of a sudden it just lets the floor come out every time. So right now it's looking like we're near that top of this move, potential one thrust higher, but with the Biden administration looking to release the strategic petroleum reserves starting, well, this month, that could change the picture for the oil market real quick. So if you've ridden this up, good job, tighten it up, because watch out below. And with that, thanks for watching. Thanks for being fans. We'll see you Monday. Bye now.